Hey, what's going on, guys? Welcome back to Q and Learning, and this is Stock Picks. And the stock we'll be going over today is Capital One Financial Corporation, ticker COF. And today they're up roughly 1%, and right now on Y charts they have a value score of 7 out of 10 and fundamental score of 8 out of 10. But valuation is roughly 44.4% under what current analysts say their target price is. And so here we can see their return on equity right now, roughly around 20%. Free cash flow looking really good at around roughly 4 billion, with a market cap of 72 billion. And so one of the big things with Capital One Financial Corp, they also give out a decent dividend of roughly 1.5%, and their ex-dividend date will actually be this. So if you guys want to get in on them for the dividend, you will have to get in them either today or tomorrow. And one of the biggest things is that I don't even think that this is just a good company based on just dividends, but just an overall growth. Right here, we see price to book of roughly 1.1, which is insanely low. And I think that any company right now, with any of the low ones in the price to book have a really good price of sales as well. And I think the price of sales is a bit high at 2.5, but I think that's not as bad as some other companies right now. And I know we shouldn't just take it as some other companies are taking a bigger dip, so it's a better time to invest. But actually, just what company is just at a better valuation right now? Because some of these companies are just pulling back, this does not necessarily mean they're a good company right now, but just what it means by their current price and valuations. And so when we go to the actual technical analysis part of Capital One, we see that they have really strong support here around 160-ish and again at like around 154. They're above all their four major moving averages, which is, really nice because we can see probably a quick uptrend here, especially going into their ex-dividend date. And in terms of just what other analysts are saying right now, um, basically in tip ranks, we have about 18 different ratings, putting around a 14 to 15% upside with target price of 185 on here. And with market beat, as we know, a little bit more not as bullish as tip ranks, but we can still see here, it's still around a rating score of 2.75 and not as large of upside with only a 2.5% upside to 165, but still an overall, you know, upside as, some companies right now I think are just way overvalued. And I do think the market will be in a little bit of a pullback, so maybe you guys should wait a little bit before investing into Capital One. And I think a good target price would be in the 150s. But if you guys could start averaging lower into them, I think this would be a really good deal. And so what I really love about TradingView is that they also give technical analysis summaries. And so as we can see here with the oscillators, we have about a neutral oscillator. And for their just overall summary, it's a buy. We have 14 buys, 10 neutrals, and 2 sells. And with moving averages, it's extremely strong buy, with only 2 not being within the buy section. And as we can also see here, the only things that aren't necessarily in their favor are their momentums in the 10-day trading, on which both say sell in the simple moving average and the momentum, which is also 10 days. And so that's what I was also saying. Maybe in the short term, they may not be the best, but I think that if you guys can start, buying into them slowly, I think they'll be extremely good. And as the last thing I just want to cover real quick was the report date, which is coming out on October 27th. So I know it's not for a while, but I just want to get this video out before their ex-dividend date if you guys did want to get in on them before that. But as we can see in tip ranks, strong buy. And I just want to show you how much exactly Capital One was basically beating their earnings by. In their past four earnings, on average, right, they're beating their earnings by, let's see, 2.3%, 3%, 10%, and 9%. And so just that's the earnings per share year over year change. And I think in overall percentages, if I just go back right here, we see that their EPS 70%, 70%, 90%, 144%. And so I definitely do think that these, numbers with the EPS and revenue in terms of the percentage beat will definitely get smaller and smaller over time. I think that they're 100% set up to beat their next earnings as well. And as you guys can also see probably by the actual growth that they've had in this past year, they've not only been extremely consistent during dips, especially when in the fall time, only dropping roughly around like 10% when other companies were dropping roughly around 20 to 25%. And so I think with their consistency, they're leading up to really nice earnings in this October and just overall growth within this next year. But yeah, that's basically all I have today, guys. If you guys got any more questions or comments, leave them down below. And I hope you guys have a great rest of your day. Peace.